international crypto tax strategies.
Hello, everybody. Thanks for being here. I'm Jaguar-Adva Gal, a lawyer, a CPA, but a nice person, though. I'm the head of Jaguar Reg&Comp, and what I do is incorporate and build crypto, high-risk gaming, gambling, high-risk industries companies in several countries over the world, licensing them, which, as we might know, is not very easy, then getting those registrations and banking, which is the most difficult part of it, and then, which is the least of our problems, having international tax strategies for those companies. It's what I do, and within that I slowly and step by step I'm giving my part in changing the financial world, and I love doing that. I work in several countries, located mainly in Israel, but operate in several countries, and I'm here to talk to you about where to get incorporated, thinking of taxation and incorporation and banking and other considerations just as well. So I'm going to talk about what should we as entrepreneurs of crypto, high-risk gaming, gambling companies should care about. Should we look at licensing limits, criteria, requirements? Are they limiting for us, or maybe they're actually promoting us as a company? And we'll talk about AML requirements. Typically, they're looked at as limitations. However, for banking capabilities afterwards, they might not be limitations. They might be a progress and an incentive for us just as well. And of course, taxation, which, there's a joke that says there is only 100% certainty in life only regarding death and taxation, right? So some of the Dubai people might object that, thanks to the almost not anymore 0% taxation, which is going to 9%. But still, if there's anything certain in life, it is death and tax, right? And I'm not sure which comes first. So let's talk about, all right, optimal taxation. Typically, when my clients come to me and they want my advice and consultation, they're thinking that optimal taxation is minimal, meaning to pay as little as possible. As that might sound logical, paying only a 0% tax is typically not the best, as surprising as that might sound, because in many other countries, tax resident countries of entrepreneurs of such companies, if you are in a 0% tax kind of country, it is considered as not as if you're paying a tax rate of 0%, but as if you weren't paying at all. And there's a great difference legally between not being taxed at all and a 0% taxation. While financially it's the same, legally it is not. So a lot of my clients get my advice of finding a country in which you can operate paying a small amount of taxation, small rate of taxation, but not necessarily a 0. So that is one point to look at it. So second point to look at is look at who you are. When you want to be taxed and you want to have an activity, let's talk about crypto, but not necessarily, you need to ask yourself who you are. If you are just an investor, meaning buying, hodling in our language, or holding it for the long term, and selling it afterwards, having only maybe just capital gains, then several countries have different capital gains tax rates for those. Some of the countries, for example, Malta, have capital gains taxation. However, crypto assets are not within the classifications and definitions of capital gains at all. This is probably changing with the next 2 years or so, because I've trained the tax authorities of Malta, and they're understanding that they need to change that. But as of now, capital gains do not apply to crypto assets. in Malta at least, and in some other countries just as well. So, and remember, as I mentioned before, a zero tax rate is not always better than maybe having just a 5% or 9% or something that is small enough not to hurt that much. However, we won't be considered as if we weren't taxed at all. So, investor, you typically would pay just a 0 to up to 30% tax rate. Some other countries, if you hold it for longer term or shorter terms, your tax rate changes. Some of the other countries, it is a fixed rate and it changes within several countries. But what if we're not an investor or we're not entitled to be defined as an investor? What if we are considered a business, which most entrepreneurs create crypto companies or gaming or gambling companies, which are actually a business, and that's business taxation, business tax rates. So, income taxation. Income tax comes in tax brackets in different countries for different levels, tiers of taxation, and it could range to up to 50%. I just recently talked to a Swedish guy, a Swedish corporation, and their tax brackets could get up to almost 70% effectively of a tax rate. And that could be pretty aching and pretty hurting. So, you know, those countries would not necessarily be the countries in which you want to operate your business, be it crypto or milk or selling oranges or whatever, not necessarily just that. So that's one. And then we have social security taxations. It differs in different countries, there are different rates, but it can get up to 15 to 18% of a tax rates, and that's pretty heavy. VAT, within the area, within Europe, within the country, outside the country, it could range from a 0 to 20% rate, and that is pretty heavy. So, why should we care about VAT at all? Because typically, the default, unless we were able to prove otherwise, that our client is outside of the region or the country, then the default is that if we didn't prove that, then we owe that VAT, we owe that tax rate. So everybody will say, fine, so we'll just, when we get the invoice, we will show that the client is outside of our region, outside of the area, outside of Europe, or outside of our country. But what if our AML procedures weren't good enough? What's that got to do with taxation? And because of that, we might not have been able to show a very good KYC, knowing your customer. And if we cannot do a good enough KYC to show that the client is not that just a digital address over the web, but the client's residence and the client's location is outside of the relevant area, then oops, the default applies to us. And then we owe that VAT unless we have proven otherwise. So a lot of businesses would say, okay, I'm a business, but my gains would be just capital gains. Or that I'm a trader, but I do that as a habit. Well, in countries like Malta, for example, I'm just picking on that country because it's very convenient to use as an example. If it's just a habit of you trading, then that's fine. You know, you're not considered a business. It's capital gains, and that's great. However, in many other countries, habit or no habit, if you stand up to several criteria of time invested in that, capital invested in that, education, proficiency, expertise in that, and hours spent on that, in some of the countries, the amount of money you make off of that, then you'll be considered a business income and profit, and you'll pay business tax rates which are much more painful, as I just mentioned. So, traders could go to be up as much as to be taxed as business, and that's really bad for them, unless, of course, you're in some countries that might consider that as your habit. But that's not all. A lot of traders who might be considered as businesses would say, fine, I'll pay those high taxes. I don't mind that much. However, they might be considered a financial institution, having financial transactions and providing financial services. And that is bad for a trader. Why would that be so bad? Because then we go to another arena, not of just taxation. We go to an arena of licensing, because we'll need to be licensed and registered as a financial service provider, or as it's called on a newer, relatively new MiCA regulation, a virtual assets service provider. And then we need to adhere to much stricter AML procedures. AML is anti-money laundering procedures, and KYCing, getting to know one's customer, which are much harsher, plus other tax brackets and criteria that are much harsher for someone who's just been a trader and is willing to happily pay the business tax rates, but they don't want to get those licenses and they don't want to adhere to all those criteria and compliance requirements that are required. And if we're a corporation, in standard countries, we can get to only pay not personal high business tax rates, but only a corporate tax rate. And a corporate tax rate is okay, because sometimes it's lower, as long as we don't get all the remaining profits and we don't withdraw them back to our personal selves as individuals, hence paying dividend taxation as well, in addition to that corporate tax rate, which would be as painful as being just a business, and we're not saving anything by that. And VAT is just as bad as in business. However, why then most entrepreneurs get incorporated as a company, as a corporate? Several reasons are, some of them are legal to have a limited responsibility, a limited liability for their activities. But that's just as long as you serve other clients. However, there are more tax-related reasons to get incorporated as a corporation, even though the dividend rates, even though the corporate tax rates. And those would be incentives that many countries would like to encourage higher employment, technical employment, and technology innovation and R&D within their country, within that area. And then we get to tap on to all those tax incentives. And those tax incentives are major. They can get you down to zero corporate tax rate for at least the several few years that you begin with. And that is fantastic. And it's not very beneficial for startups who might start with not being profitable in the very first few years, but only afterwards. But it is very profitable if you consider a startup, but you're not an R&D company, but you are a trading profitable company, at least as of the first year or two. And that is very, very useful. In addition to that, we also have, if you were using actual products, not just software, not just trading, actual physical products, we have a lot of custom-related incentives that are there to encourage people to get incorporated within that same country. So tapping into those incentive plans are very beneficial in several countries. So I would like to discuss some of those countries with you and to talk about incorporation. First, we mentioned tax, and that's a mathematical kind of an equation to consider. So that's easy, relatively easy. It's math, you do the equation, you get to see where you're taxed at, remember, not necessarily minimal, but where it is optimal for you. And then let's imagine you find some of the countries which might have a 0 tax percent or a very, very low tax percentage. And then you'd want to go there and get incorporated there. However, you find out that those countries are smaller islands which would call themselves Bahamas, for example, or some of the many other islands, whose, I'd say, enforcement, whose law enforcement might be, I'd say, flexible. If we all remember very few months ago, FTX case, which was incorporated in the Bahamas, as an example. And there's a lot of accusations nowadays regarding the governance there and that the authorities over there regarding how well compliance was enforced over there. So if we get incorporated in some of those islands, that could be terrific, getting a license, getting registered, or maybe not even having to have a license, which could be fantastic. However, afterwards, try to get banked. Try to get a serious bank to hold your currency, you hold your treasury and your funds, and then to pay your suppliers. So what do people do if we have no choice? If we have no choice, we're using, because we have no better option, we're using financial service providers which are not banks. Some of them call themselves banks, but they're not real banks. We're using EMI, electronic money institutions. We're using money service businesses, MSBs. But these are just not banks, which could have been fine because a lot of businesses work with these and because we have no better option. However, the issue comes when you want to transfer your funds onwards from these institutions to regular banks. Some will accept those funds, some will accept those funds with too many questions, too harsh of a due diligence, too harsh of a KYC and AML procedures, which would be exactly the ones you wanted to avoid when you started using those EMIs and financial institutions in the first place. And then we might get stuck. So it might be okay for some of the corporates to get stuck with their funds within EMIs. However, if and when you want to pay the authorities, you want to pay for licenses, you want to pay your taxes, and you might be having to have a regular old school bank, then you might tackle an issue. And that is another thing to consider when you choose where to get incorporated, in a very strict law enforcing country or in an easier, let's say, locality, an easier regime, right? I'm skipping up onwards. When you get incorporated in a country in which management and control of that company in that country is managed from outside that country because you don't live there or you don't have a strong enough representation there of a director, you might be considered actually taxed at where the founders, the entrepreneurs are located and not necessarily where the company is incorporated. Beneficial owners could be considered and are named straw people, straw man, other reps, shadow directors, etc. We need to take those considerations into account as well. I'll skip on the anti-money laundering procedures right now just because of time, although it is very important to take those into considerations. But we can look at the UAE, which has several regions among that. The US, which is the harshest. Sometimes a lot of companies are restricting access to their websites from United States IP addresses just in order to not have to comply with US regulations or the notorious or very good, I would say, SEC, the Security Exchange of the United States, or some very unique islands, as I mentioned before. Different countries have different definitions. I'm skipping those just to show that there's several of them and how they define the assets. But I would say that taxable exchanges of currencies would happen regarding in several countries which would define those either as goods or services or as a real currency in that sense. How much time do I still have? I don't. All right, cool. So there's VAT exposure. If anyone wants to talk about it any further, please come to me afterwards. I'll be happy to talk. And I'm cutting off here. Thank you, everybody, for listening. be wise, or otherwise you'll have to use my criminal department of my office, and I don't want to see any of you over there. So be wise. It was a pleasure talking to you.